Hey guys, it's Keith Allen. Since I got a number of questions on setups and settings on the MTF Mean Reversion Indicator, I thought I'd crank out a quick video and really try and condense it all out into one quick explainer. So when you first add the MTF Mean Reversion Indicator to your chart, you're going to see that it is coming with a lot of stuff on it, right? You see all these different channels. These actually represent the fib channels within the indicator here, right? And it also, you'll notice that when it's the default setting is a 6% deviation. That's kind of high considering the volatility that we've had lately. Now, when we first started doing this, when we first developed this, we would run our USDT trades at 3% deviation, and we'd run the Bitcoin pairs at 6% deviation because of the difference in volatility. Now that the market has evolved so much, you really do yourself a lot of good if you customize relative to what the volatility is in any given phase. The way I like to use it is I set up bots at different deviations so that I can turn on and turn off my lower deviations if we have high volatility, and the high deviations, if those get hit, all the better, right? I put more money on the bigger deviations than I put on the smaller deviations. I'll take more trades on the smaller deviations than I do on the bigger deviations. Just that's capital management for me. So the first thing in terms of cleaning up the chart, so you're not seeing all of this stuff, all you have to do is click away what you don't want to see. Personally, I just want to see the top channel, the bottom channel, and the middle. This is mean right here in the middle. And you can, of course, customize the colors any way you want. So all you do, click them out. Click them out. Simple as that. Just click away what you don't want to see. It doesn't change the performance in any way, shape, or form. All it does is clean up the view for you. I find that helpful. A lot of people like to see all those little nuances. And when we first started trading it, we would, if price wasn't necessarily hitting in that full range, we would trade the channels. Well, now that things have evolved and we have a much better understanding, and I'm talking like 6-7 years ago, now that things have evolved, we just set different deviations, and that seems to be very, very effective. So this is a much cleaner view of the indicator. Right now I just have the top and bottom, and this is, like I said, the default was 6%. So you can see I have it added to my chart a bunch of different times. So I'm gonna show you what it looks like at different deviations. This is 1.5%, pretty tight, but Bitcoin and ETH in particular haven't been super volatile, so that's what makes this an effective setting. If I wanted to see even more signals, if we were in just a straight up sideways chop, I might even go as low as 1%, but that's going to increase the number of signals that you have. You might be faced with more drawdown. That might be an issue on capital management for you. So you really have to be conscious of what you're doing and how many trades you're willing to take. I do like the dollar cost averaging aspect here, though. I'll take all the trades and small positions and dollar cost average my way in. So that's 1%, 2%, 3%, and just take, right? So nothing is hitting on 3% these days for this particular asset. So you'll notice if I take out that 1%, the 2% is kind of the sweet spot on what the low has been lately. So let's go back and add in, right? Even that one didn't quite trigger. And the reason it didn't trigger is it was just a super quick wick and it didn't close below the line. And you can add these different channels. So when you're setting up for a particular, like if you're going for a broad range of assets and you're like going to do a basket of alts, then you might do something like this to set up and see where the sweet spot is on the range, and then set up your bot to have however many, a composite bot with however many assets you want in it. And that way you don't have to have a bot for each individual asset. I like the control and the nuance of just being able to select the assets I want and having control over each one. So I do a separate bot for each asset. That's my preference. You do what works for you. In terms of Bitcoin pairs, let's just take the same pair, and we see that ETH USDT has been trading in a 1.5 to 2% deviation range, if we did it on a Bitcoin pair, how would that look? It's been also not that volatile. So this is 2% here. If we added it to 1%, we'd start seeing some signals. So it just depends on, and of course, if you get in a period of big volatility, this 1% bot could start going nuts and drain and burn through all my capital before I get to the deeper deviations. So this is where capital management and bot management becomes really, really critical. But now you know how to clean up the chart, simplify the chart, so you don't need all of the different deviations on your chart, and you can find the range that any asset is trading in by putting, and you can put as many of these on. Like I have bots with deviations up to like 15% deviation. That's for like those big, the big nasty black swan that comes then, or I have those huge dips. I'm going to take a bigger position on that. I don't have the capital to do 100 trades on that bot at that deviation, but I only want it on like, the select stuff that I really want to accumulate. So that's how I'm doing it. I hope you find this helpful, and you do what works for you. Of course, if you have more questions, give me a shout. You know how to find me. Thanks, guys. We appreciate the ongoing support.